So you're looking at an options chain, and this is courtesy of the group member Kung for pointing this out, and I wanted to settle this with, of course, tying this to SEC filings. And this is something that you probably have seen and looked at and observed in the markets at some point in time. So you will come across strike prices with the 0.5 intervals, and specifically, you'll notice one thing. We don't see any 0.5 strikes until you get to 402.5, and then they're spread out by $5. 402.5 to 407 to 412 to 417 to 422, and then they stop. Now let's look at the volume real quick. Oh, I was already on the volume. Okay, so as far as the strikes with the intervals, no volume today, no volume today, no volume today, no volume today. These were likely just added after hours. Now, what does this mean? Well, this is where SEC filings come into play. Because if you go to Google and just type in 0.50 strike program, and then to put PDF at the end of that search, you're going to come up to strike price program, sorry. You're going to come up to the Federal Register rule filing. And this is series of options for trading, and this is the rules of the NYSE ARCA, which is where SPY is listed. Let's read the text of this exhibit, and this was published, I believe, sometime in April of this year. So the exchange may not list a series with $1 intervals within 50 cents of an existing strike price in the same series, except that strike prices of $2, $3, $4, $5, and $6 shall be permitted within 50 cents of an existing strike. 4 classes also selected to participate in this program. So there's an actual program called the 0.5 or 50 cent strike interval program that SPY does qualify for. And I'm going to show you exactly why. I'm going to go to the table real quick. There's actually a table that goes over this. And it is right here. So this was filed, let's see here. Yeah, oh, actually this was August 1st, 2022. And this is actually SIBO BZX, but it was adopted by some of the other SROs as well. Now, the reason why you see these strike prices with the 0.5 interval is because, according to this table, if you are in a 500 or greater dollar stock, then you're allowed to put the intervals at $10. If you're between 150 to less than 500, you can put $5 intervals. So again, if we look at SPY, that's exactly what we just saw. And SPY will be a tier 3 because the average daily volume can be 0 to 1,000. It's the only tier that you don't have to have volume in order to get these strike prices created. So if we look back at SPY now, we can see that, number 1, the volume falls within that zone on all of them, and as well, the price falls between 150 and 500, the price being of SPY. So that is exactly why you're seeing it. Now, as far as why this is occurring, let me see if I can find it. Assume a tier 3 stock, which is SPY, closed on the last day of quarter 1 with a quarterly share price of less than $25. Therefore, utilizing the current table within paragraph F, the interval would be 250 for all strikes because it was less than 25 bucks. But I'm trying to figure out why they would want to add these. The table within paragraph F supersedes other rules pertaining to strike intervals, but the table does not supersede rules governing the addition of option series. Okay, finally, the exchange proposes to amend Rules 19.6 Interpretation and Policy .05e to extend 0.50 strike price intervals in equity options to short-term options with strike prices less than $100 instead of the current 75. So they've increased the threshold there. And this change is intended to conform this provision of the short-term option series program to that of other options exchanges. So they're just trying to get in line with other exchanges. So that's exactly why you're seeing it. It's because it's a literal rule. And again, everything that you do and experience in the market is tied to some form of SEC rule. So this one just so happens to be the short-term option series 50-cent strike interval program. And this is the amended table. So again, it's amended to where SPY meets the exact criteria to have that $5 half-dollar strike interval setup. So that's why it's happening, because of this rule. Now, I need to look in further to what it actually means and why they would want to add in strikes at these levels, because if you look at the chart, let's go to the daily real quick. The strike intervals that are on Friday, they occur at 4:02 and they stop at 4:22. Now, if we look at the chart, 4:02 clears us past this gap. Let me remove all these other lines real quick. So this is the blue line that I made up top is the first strike interval with a $half. The second one is just before this top gap there. So that's your little zone basically. I can actually get this spot on. 402.5 right there, just after the gap starts. And then this one here is, what is it, 422.5? This one's just before this gap, just after that one. So those are the strike prices that they just wrote. Let's get them all on there, might as well. This one it was 402, it's got to be 5 apart, so 402.5, 407.5. And then we got 412.5. Then we got 417.5. So these are your strikes with the 0.5s that just got written. And if you look, it's pretty effing interesting to me that all of these strikes fall within the gap zone. Option smiles still exist out of the money. The lowest IV for this Friday being it's a tie between 397 and 398 for the lowest IV. But keep in mind, these are moving targets. So if tomorrow the stock market goes up by like 1% or so, these will shift higher, probably end up around that 400, 401, 402 maybe. This is for the 12th though. Let's go to the 7th specifically. The 7th is when those 0.5s are. And the lowest IV is at the 390. Let's see if those strikes end up anywhere else. Let's look at the 21st. Not on the 21st. Is it just on the 7th? Interesting. Yeah, so it appears to be just on the 7th for those strikes. I'm wondering, I'm going to look into this and figure out exactly why that would happen. But yeah, good catch, Kung. Oh, here's one for the 14th. Okay, so for the 14th, we have 387.5. Is there any on below the current price? No. 387.5. And again, see how there's still 5 apart? That's because of that rule. 387.5 to 392.5 to 397. And where does it end? And then it ends at 407. Because, oh, baby girl, this is it. This is the reset. I'm telling you right here. Okay, so hold on. Okay, let's do it this way. We're going to mark the 14th different than the 7th. So this is the 7th is going to be orange. The 7th is going to be orange. And what these are, again, is the strike prices with the 0.5 interval series. So we're going to mark these orange. And I'm going to put this to remind us October 7th. orange. And then we're going to do October 14th, which starts at 3. This is amazing, dude. It's going to be, I mean, holy shit. Okay, hold on. 387.5. 387.5. 387.5. Oh boy. Okay. We're going to make these, let's make these purple. 387.5, and then it's 5 apart, so let me just make sure I got the first one. 387.5, okay, perfect. 392.5. 387.5. Make it purple. 392.5. 387.5. 397.5. 397.5. And where's one more? Should be one more. Or should be two more. 397.5, and then there's 392.5. We already got that one though. 392.5, 397.5, and then 402.5. 402.5, which we now have 2 on the same one. 302.5, and then there's one more, right? Yeah, 407.5. So if I had to guess, and you know, it is what it is, but don't you think that's pretty interesting? Looks like it's perfectly hedged, right? It's symmetrical. You have, oh, let me fix this one. Actually, I need to get this pinpoint accurate. 1 second. It's a little bit off. 402.5. Change this one to white because they're overlapping. And then 407.5. So, what do you think? You got 3 strikes to the upside, 3 strikes to the downside. If you look at the expirations, this is the 7th. And we have the 14th here after the CPI numbers come out. Coincidence? But this is why the group is beautiful, because Kung, had you not have pointed that out, I wouldn't have looked into this, and we may not have seen this. But since you looked into it, now I look into it, and now we're all smarter because of it. So here's your 7th. Here's your 14th. Current price sits at... Oh, look, it gapped up. Hold on. I gotta check for the last video. There's that. Man. Did I not call it? I mean, there wasn't a gap, remember? And I said it was going to be fair value. If this lands like right on the fair value for the RSI, I'm going to shit my pants. Dude, it's right there. 45 on the dot. Dude, come on. All right. This is for real, bro. I'm not fucking around with this no more. Time to get rich. Time to get rich. For real. But yeah, you see what I'm saying though. Daily. Look at that. 14th here. 7th here. We have 2 days. So I'm thinking, do we end up somewhere in between these 2 overlapping strikes and then the reset? Because these will probably all expire worthless up here. Not going to lie. These will probably all expire worthless when the time comes for the put side bears. But I'm thinking, is this our guide to this month? Could be. And then you look at what I was talking about in the last video. You can't get any more perfect than that. There was no gap here. I even said straight up that it's probably going to create a gap right at fair value. And then you look at the RSI when this happened, and it's exactly at 45. Get the hell out of here. Wow. Wow. Amazing.